All right. It's Jared here from Crypto Plan. How's everyone going? I hope you're doing well. I've got a little lesson for you today. I love learning things, and I've just learned something new about chart analysis. And I'm going to use the Harmony One chart just to outline what I've learned, when you should have bought it, and when to sell it. So stick around, and we'll learn a little thing or two together. Like it's not brand new to me. It's definitely fits in with my trading thesis. It just is something that is evolving in my trading kind of strategy, and it's just a confirmation thing. As in, there's a book out there, and there's some there's some strong evidence that this works. So please like the video, please subscribe to the channel if you're new, and please click the notification bell to be notified of this great content in the future. Let's get right into it. So we're on the Harmony One chart, and I'm going to try and keep this real simple. And what we're talking about is stage analysis. So stage analysis, there's an author called Stan Weinstein, talks about it in detail in a particular book which I've just started reading. But I've known about this through a lot of chart analysts that I follow. It's just I'm kind of now getting, sinking my teeth into it. So there's a couple of things we want to be aware of. That is, how to draw a trend line. That we've got a weekly chart and a 30-week moving average. That we have volume down here at the bottom. And then I've also added in this distance from the 30-week moving average, right? So these are the things we're going to be using to predict when we should have bought it and then when we should sell it, all right? But the main concept with stage analysis is that you should buy a stock in stage 2 or a breakout into stage 2 and sell it at the end of stage 2. So I'm going to show you what that means and how to do it. All right, so this is what we're talking about. So stage analysis is, stage 1 is a bottoming pattern. So it's it's the bottom of a bear market. Stage 2 is the breakout, and this is where all the gains are made, So this is over a month's period up to a year that this happens, right? Sometimes longer if you're talking about these FANG stocks or whatever. But yeah, so this is the bulk of the move happens, and then stage 3 is when the topping comes in and we start crossing below the 30-day moving average, and then stage 4 is the bear market decline. So that's what we're talking about, just for reference. So going back to this chart, so we have Harmony One's a new asset, so there's not a lot of historical data. So it kind of performed fairly well to this trading method. And at the end of the day, I think a lot of us probably by luck or default got in at the right time for this stock. And I'll zoom in there, and that is probably about that level there. So around this 0.5 cent level, right? And you can see, when I was it was mentioned to me, it was around this time, maybe pre-January, maybe a little bit earlier. But when it started to kind of take off and people started to talk about it, and my video started to get a lot of views, was this thing. And I guess that's, that was the activity on the chart that you needed really to start being interested in this particular stock. So you can see there, in the 4th of January, or the week ending the 4th of January, price jumped above, closed above a 30-day moving average, 30-week moving average. And then it continued to open and close a candle every week from then on. So I guess ideally, the 4th of January would have been the best time to buy. But if you were nibbling away in these kind of weeks here, there was really beneficial, and that's your kind of nibbling away starting positions. But I guess once we got to this first week of February, when the entire candle opened and closed above the moving average, and it didn't even wick below it, that price action the entire week was above that level. That was kind of our confirmation, and the fact that then this candle closed above that downtrend line, right? So we've had a breakout confirmation, a breakout evidence price trading well above and closing well above the moving average for a while, a breakout above a downtrend line, and then you can see what happened. The next week that price closed above that downtrend line, we had a massive week, right? And then kind of the rest is history. Big massive week pullback, and then a couple more massive weeks, and now we're up there. So then the other thing we want to be aware of, so one, we're in stage 2, right? And we are still in stage 2. So I guess we're in stage 2.2. If this was stage 2.1, and I'll get a pencil here for later. So this breakout zone was stage 2.1. Now you wouldn't be critical of anyone that took profits here. Knowing how far, if you're a trader using this method, if you took profits here, even sold out of your entire position at this point, because you were so extended from that 30-week moving average that this could have been, a predictable circumstance in hindsight that we would pull back and potentially test this 30-day moving average. So if you did do that, congratulations, and you could have, sold out your entire position and then bought back exactly what you had again for a lot cheaper, and let that ride for the next part of stage 2, which is stage 2.2, we'll call it. So okay, so if like we say, we've done stage 2.1, had a good run up in price. We've got this evidence here on the chart that says it's willing to be extended 900% beyond that 30-week moving average. And at this point in May, the 17th of May, or sometime in May, the price dipped to exactly tap off that 30-day moving average, which is quite surprising that it performed that move to the T. So if you were dedicated to this particular trading method, and like I say, took profit anywhere in this kind of run up, or sold out of a large portion of position anytime in this kind of run up, were patient and then waited to the tap off of support, or using the 30-week moving average support, you could have got back in and taken your 20, whatever amount of One Harmony for 20 cents, sold them all, and then bought the same amount for 5 cents, and then the rest would have been your play money to go around the other market or buy more One Harmony, whatever. But the reality is that for those of us that were scared about it breaking down further, this is the evidence, right? It tapped off a strong support line, which was a technical moving average indicator that probably a lot of good traders use, and that's what happened. The volume or the buying got snapped up there just enough to kind of kick it out of there. So the big question is, when will this end, and where will it end, right? So I've given my predictions over and over again, and I'm very clear and transparent about somewhere 80 cents to $1.80. There's a range there that all my technical analytical methods provide to give a rough range where I think it will hit. So we have a kind of a channel there. So if we call this kind of fan, or this opening wedge, a stage 2 channel, where we're looking to kind of price to kind of I guess bounce along this lower edge of the support line before it kind of goes parabolic again. So let's just draw, a guesstimation of, where this might happen. I guess that moving average is probably going to kick up, and then, at some point, curl over on itself. Maybe, I don't know, maybe it'll go up a bit higher, kind of kick over and curl over on itself at some point, and then go down, right? So that, let's say that's our guesstimation of what the moving average is going to do. It's going to get pretty high, and then it's going to curl over there. Because at some point this thing's going to go parabolic and really tear away from it again, because that's what will happen, according to stage analysis and knowing bull markets and cycles and all that sort of thing. There is, that last 10% of the move is going to be huge, and it's going to be massive. But let's just be a little bit conservative there. The moving average will only ever get up to about 50, 55 cents, something like that, right? So now we can start making some predictions, right? So based on that, we've got a couple of things. One, the price action has touched this upper trend line a few times before. So, we could potentially say, oh, yep, it wants to touch that again. That would give us those crazy kind of $10 targets, but I don't think that's going to happen. I think it's probably more like something like this as a trend line, that we're going to see some kind of an intersection happening there. So let's use kind of that rough guide there, that it might want to kind of reach out towards that at some point, and then kind of consolidate and then go up and over. But the main thing we want to kind of, I guess is based on this distance from the moving average. So if we were to say here, how far is 900% from that moving average? If the moving average got that far, now by the time it gets there, it's curling over on itself. So it's probably more like, when it's there, so would we say around 900%? So, if this thing gets super bullish, it grinds its way out of there, and then kind of taps off and goes parabolic once it reaches all new all-time highs again. We're really guessing here, but it's another figure that I've put out there that potentially it can get somewhere, in the $4 or $5 range. And I think that's possible, particularly with how bullish it had been, how quickly it moved away from its moving average that time. Will that happen again? There's no guarantee. Maybe we'll be a little bit more conservative and go, somewhere like when it breaks out here, retests and kind of pulls back again. So we'll go somewhere a bit more like that. So maybe more, more in the kind of plus $2 range for the, the extreme parabolic reach out. But these are good ways to kind of get rough estimates of targets in, because we can use the Fibonacci's and we can use kind of, the measured move predictions and all that. But I think this extension from the moving average is really going to be the indicator I'm going to use to determine when I start selling, or, when I see these candles here pushing up into the, 700-800 range, I'm definitely going to be looking at the charts very closely and taking some note and going, well, how does it feel? Does it feel, super bullish out there? What's happening with other assets around there? As other things topped out and started to retrace, what should I be doing? And, what's Bitcoin doing? And essentially starting to, sell percentages of those, of the entire position, just because, you don't want to be caught on the other side, guessing, if you know what I mean, thinking, oh, this is a retracement, it could go higher, and it doesn't, and then next time you're on the other side of a bear market retracement, well below this 30-day moving average. So here we go. That's this some new kind of chart analysis for you, some stage analysis, knowing that we're in stage 2, so there is no reason why you shouldn't buy by the rules of stage analysis. You're buying while it's above a 30-day moving average and it's looking to move and extend beyond that 30-day moving average. Again, yes, your parabolic gains aren't going to be as much as if you bought down here, but it's still, from a trading perspective, it is still a good time to buy. You definitely don't buy when you're 900% from the 30-day moving average. That's a bad time to buy, just for the future. And if you did do that, don't look at it as like, oh my God, that's the worst mistake ever. Look at it as a mistake to be learnt from, now that the light's been shone on chart analysis, you can go, yep, I'm going to only buy on pullbacks if it's extended from the 30-day moving average. I'll buy on the extreme pullbacks when everyone's when it's pulling back towards the 30-day moving average, when it pulls back towards the 30-day moving average, and more recently when it tapped off the 30-day moving average. So you've got clear points here where 1, 2, 3 times where if you had have added to your position, it would have been a really good choice. Because even your base position will always be keep your portfolio in the plus, in the gains or the unrealized gains section, right? So that's the one harmony there, and that's kind of just a fun way of predicting another bullish target. But I guess once we get to September, October, we can see where that 30-day moving average is, and just keep kind of separating 900% from there and just seeing where we're at, as in, if it decides to run really hard, where's that 900% range at all times, and kind of nearly plotting a 900%, parallel moving average above the 30-day moving average in a way, just to kind of keep us in check of when we're getting close to that, because they're good times to take profits. When things are euphoric, when everyone thinks it can't go any, it's just going to continue to go higher, then that's a good time to, I guess, be selling if you're the contrarian and following these strict strategies, right? Just going to have a quick look around the market. For those game credits holders, same deal. If we bought in around six or seven, which is where I was accumulating, we were all good. We were breaking out above the 30-week moving average. Even though we dipped well below it there, it was a fake out, and we're closed above the 30-week moving average, and we're still above it. So we're not bearish on game credits. We are not bearish on, what else we got to keep up to date with? Cake. We're above a 30-week moving average on Cake. Hatha, there won't be enough data. Dash, yeah, close enough to a 30-week moving average. XRP, we're above a 30-week moving average. Cardano, we're well above a 30-week moving average. Ethereum, well above it. So you can see that, once again, the weight of evidence that we're still in stage 2. We're not in a bear market. Things were just correcting the way they usually do, retesting somewhere towards that 30-day moving average, 30-week moving average. Peercoin, well above the 30-week moving average. Safe. EOS dipped below it, but well above it now. The ones that I am scared about, which I was kind of, I think they're probably my worst 2 trades, is Band Protocol. It's now that 30-week moving average has become resistance. And same with AURC-ID, that 30-week moving average has become resistance, which is quite scary. Which is starting to make, I've learned some things new, and sometimes you just got to cut your losses. So I'll keep you updated whether I do cut my losses on Band and OXT. And then what else have we got? We've got Reef. Not enough data there to give us a moving average. But yeah, things like Theta there, above 30-week moving average, OMG, above 30-week moving average. So you can see, if you look around, there's a large percentage of assets that are well above their 30-week moving average, which is, to me, in the bull zone for just tapping off it and continuing their parabolic runs. All right, so I've been Jared. This has been Crypto Plan. Please like the video if you've gained some insight from this, and click the notification bell if you so desire, and to subscribe and all that sort of stuff. And I'll look forward to chatting you on the next one. Bye now.